What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell for me so that you're notified every time I upload a new video. Be careful down in the comment section of the videos, guys. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open up a new Webull brokerage account. Put at least 1 penny in that brokerage account. They're going to give you 12 free stocks valued all the way up to $30,600. If you're interested in that offer, though, I want you to go down to the description box and click on that Webull link. Open up that new Webull account today. Go get that free stock and go get that free money. So I'm online doing a little research on 3 of my favorite companies: Facebook, Tesla, and Apple. And through that research, I uncovered that a big part of those 3 companies' revenue come from outside of the United States, which was surprising to me. Let's start with Facebook. Facebook generates 50% of its ad revenue outside of the United States. I thought that was pretty interesting. And Facebook's largest population of active users come from India. 320 million people use Facebook in India. I thought that was interesting as well, compared to around 190 million people here in the United States. Let's move on to Apple. 67% of Apple's revenue is generated outside of the United States. That's a huge figure to me, man. That's just a huge number to me. And we look at Tesla, about 25% of Tesla's revenue is generated outside of the United States. So what does that mean? When I'm thinking about investing in these companies, is it safe to be invested in these 3 companies with large parts of their revenue being generated outside of the United States? Actually, I think it's a smart way for these companies to diversify their revenue, right? You know, when the United States is going through a recession, you know, that gives them the opportunity certainly to continue to be profitable and generate revenue because of, you know, all of their sales are not dependent upon America. So I kind of like that. But it also could hurt them, because you think about it, you know, America has the #1 economy in the world. We're at about $19 trillion economy. And as our economy goes, the global economy goes, right? So if our economy is in a mess due to high inflation, what does that do to the global economy? Well, it creates an increase in the value of the dollar, which then requires other countries to spend more of their money in order to pay in the dollar. See, the dollar is the world's currency. You know, when a country in Europe buys material, gas, any commodity from another country, guess how they pay those other countries? In US dollars. But as interest rates rise in the United States in order to fight inflation, that increases the value of the US dollar, which in turn really hurts the rest of the world, because now the US dollar is more expensive. It's worth more. Therefore, their dollars, they have to bring more of their dollars in order to buy or trade in US dollars. So yeah, it hurts the global economy. It hurts the global economy because of that. But when it comes to these companies though, right now, I think it's smart to diversify, man. I really do. Don't get me wrong. The US is still their leading country. I mean, they still have to do well in the US, or, it doesn't matter, right? But I think by diversifying their revenue like that, it does give them certainly the advantage of not having all of their sales or all of their revenue generated here in the United States. So what's going on right now in the stock market relative to the recession? Well, the stock market sold off, man, ever since Chairman Jerome Powell made his comments in late August at his Jackson Hole meeting. The market continues to sell off. And the reason the market continues to sell off is because institutional investors are not comfortable with the stance that the Federal Reserve is taking on lowering inflation. They're just not, they're not comfortable with that stance. So what they do, they sell off. They move their money out of the stock market until they get a clearer understanding of what the Fed's position is on increasing interest rates. Right now, the sentiment is, and at the end of September, the Fed is going to increase short-term interest rates by 75 basis points again. Guys, that will be the third time this year that the Federal Reserve has increased short-term interest rates by 75 basis points. Man, that's unheard of. So that'll be 5 rate hikes, right, in the first 3 quarters of 2022. And it's expected that they're going to be at least 2 more rate hikes in the 4th quarter of 2022. So you're going to have a total of 7 interest rate hikes in 1 year. Wow, man. And that's the reason why the market is selling off. Now, here's what I think, though, and you guys have heard me say this before. Investors got no choice but to get back in the market, in my opinion, in the 4th quarter. And I think they will jump back in and start investing in companies again, driving up the stock market again to get a 4th quarter rally, right? I think that's what the institutional investors will do, because I think they want to end 2022 with a bang. So that's my opinion. So I think in October, you will see the stock market bounce. It'll rally because of institutional investors wanting to have one last shot at 2022 to try to make some profit, right? Because at the end of the day, guys, you got to understand this. These guys and gals only make money when they're in the market. They're not going to make money by keeping their money all in cash. Now, they got a lot of it in cash right now because of what's going on with the Fed and their hawkish attitude towards inflation, bringing inflation down. But that's not going to last. I think in October, they're going to get back on it and start making moves and investing in the stock market. And then that's going to rally the market. So be prepared for that. That's just my opinion. I don't have no crystal ball, but I'm just giving you what I think history says they'll do. I believe they'll do it again. What should you be doing? Again, guys, you know my attitude ain't changed. You guys need to be dollar cost averaging in, man. Your favorite companies, favorite ETFs, favorite cryptos. You got to be dollar cost averaging in, man, for the long haul, for the long game. Don't be afraid. I know what you hear, a lot of stuff on the news, and People saying it's going to be this, it's going to be that. And guys, don't pay any attention to that. Just stay the course, right? Make sure you're earning. Make sure you're managing your expenses. And then make sure you're investing through dollar cost averaging, right? I think this is the perfect time when everything's on sale. See, in my opinion, the perfect time to buy assets are when those assets are trading at a discount, right? Remember back 2008 when we had the real estate debacle in our country, and everything, pretty much all assets like businesses, real estate, stock market, all those assets plummeted. But guess what? The people that were smart enough to start buying those assets at the lowest in 2008, 2009 are the people that, if they held them, right? If they held them, and I was one of those people that held them, I made a boatload of money, man. I made a boatload of money because I'm telling you, the best time to buy assets is when they're on sale. And right now, paper assets, stocks, bonds, mutual funds, ETFs, index funds, they're on sale, man. So what you should be doing is figuring out, how can I up my income so that I can buy more? And as long as you're willing to hold them 3, 5, 10 years, you're gonna make a lot of money, man. You're gonna increase your net worth. That's my opinion, right? So, drop me some comments, man, and let me know what you think about, Facebook, Apple, and Tesla generating good portions of their revenue from outside of the United States. I just thought that was pretty interesting, man, because I never knew that until I started doing the research on it. But that's pretty interesting. But again, I get it. You don't want all your eggs in one basket, right? U.S. economy goes to the crapper, and 100% of your revenue is generated from the U.S. economy. You're going to be in trouble, right? So I get it. I get what these 3 giant companies are doing, and I ain't mad at them. If you want those 12 free stocks from Webull, I need you to go down and click on that link in the description box of the video. Open up that Webull account today, man. Go get up to 12 free stocks. Guys, go get that free stock, man. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing. Share the video. Smash the like button. Thoughts become things. See it in your mind and hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace.
Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.